I'm Ellis Martin. Join me for a conversation with Robert Rohlfing, the CEO, and Don Mosier, the president of Desert Mountain Energy Corporation, trading as DME on the TSX Venture Exchange and in the U.S. as DMEHF. Desert Mountain Energy is a forward-looking resource company actively engaged in the exploration and development of helium and rare earth gas properties in the U.S. Southwest, with its executive offices in Vancouver, Canada. Currently, the company holds over 85,000 acres of land in Arizona, the world's best address for helium. I caught up with these two gentlemen face-to-face recently in Scottsdale, Arizona, as we cover the company's latest news. Welcome to the program. Nice to see both of you gentlemen here in Arizona, where things are happening.
Thank you. Pleasure to be here.
Tell us about the good news you have with well number 3.
I'll digress back to well number 2 first. We went back in on well number 2 as we said we were going to, and we recompleted into a lower portion of the same zone that we had previously completed the well in. And we have the first hydrogen helium field discovery, at least in Arizona.
Well, I have to ask you what you're going to do with that hydrogen. Looks like it's about almost 4% compared with 92% nitrogen and 4% helium.
Initially, we're going to use it to help power the processing center. And then later on, we'll work into putting it into working with other companies. I think if people have looked at previous press releases, they'll see that there is something that should have given people a heads up as to where we're going with hydrogen. And there's a lot of new opportunities with hydrogen and the green energy.
I did take a look at that press release, as a matter of fact. So what I noticed is that you're now consulting hydrogen using firms on storage of hydrogen, which has been difficult, especially for the automotive industry.
And that is the largest problem with it, is a safe storage. And what we have been working on for many years in working with how do you deal with helium and keep it stored long-term, short-term, and compressed air energy storage, and then going into how do you really deal with hydrogen long term, whether you put it into a magnesium-based type of, for motorcycles, that's been experimented with in small cars, where it's almost like a caulking tube. It's a mixture of manganese and some other things and hydrogen, and they mix in water, and so that you can burn that. But it still becomes, the real issue is how to safely store it. Well, Arizona has wonderful salt, and you create caverns and you put it into it.
Millions of years ago, this entire area was covered with water, so there's no doubt that there is plenty of salt down there, and that's a brilliant way to store hydrogen. I had never considered until I read your press release, actually. This has to be very good for the company, ultimately.
It is, and if you look like where we're at today in Phoenix, there's the Luke Salt Dome out to the west, and it's been highly developed out here, but Luke Salt Dome itself is almost 14,000 feet thick. There's other salt provinces in the state, so we've researched that over many years. So how do you apply that technology to the hydrogen storage unit? Well, the other problem with hydrogen has been how much sulfur are you dealing with, because that becomes corrosive. This is the first full-on discovery where you have no sulfur, so you get away from the corrosive aspects.
So you can store it here in Arizona, but what about beyond Arizona? Or are you only concerned with the 200-mile radius that we're talking about with helium anyway?
You're really looking within a 4-state area initially, because that is where you have rail. And where we're at in Winslow, we're located right on the east-west, and we can go east, west, north, south with rail. So it gives us a way to hit the Transcon and stay off the major highways with it. It will not entail building pipelines.
I understand that you are slated to go into production in Q2 of 2022. How will we get there?
Our engineering team right now is finishing up the final analysis and securing the final contract. We had looked at trying to purchase other equipment and modify it just to help cut down on the time frames. And it still comes down to there will be certain key critical parts that we don't have to wait for. Whether it's in the 1st of April or the end of April, or it will be in the second quarter that will be into production. That's our goal. And with the second well, our discovery there with hydrogen, and we have within that, we have none of the other noble gases. It uncomplicates the issue of dealing with the rest of the noble gases and trying to extract them. What you're looking at is every step for every noble gas, you have to add another level of processing, and it has to recycle back through. And you have to keep recycling this. And it's compression, pressure swing absorption, and membranes. So you have a whole number of things, and it becomes more and more repetitive. Because with this newest discovery, we're going to actually add in the production from the second well into the Macaulay field. So it actually will help us get online to a higher production rate quicker.
Between 4 to 6 wells that you will potentially have in production in April, typically there's a pilot plant that you start going into production with before you go into full production. So explain, if you will, what that process looks like.
When you're going into helium production, you don't put in a pilot plant. We already know what we can separate. And that's what the engineering work that our team has been working on thus far. So we're already down the road past that point. We know we can separate it. We're not cracking hydrocarbons. We're not cracking tellurides to try to extract REEs and gold and silver and dealing with the outfall of all that and lead and cadmium. We're dealing with just a very basic, as you could see from the information, it's basically nitrogen. Number 2 component was helium. Number 3 was hydrogen. Then you're into a very minute amount of CO2 and then nothing else. It uncomplicates the processing facility. Supply chains issues are still an issue from COVID in the U.S. Even though we have commitments as to when they expect us to be able to finalize everything, it may be from the beginning to the end of the second quarter of 2022 before we actually can operate. Once we start up operation, you don't just start out at the highest amount. You have to make sure everything is operating correctly. You have to maintain inbound pressures. You don't want to pull too heavy on any well because that affects your long-term production capability from downhole. So you have to gauge as you go along on this. So it's not an instant just flip a switch and you're instantly operating. Basically, over a 3-month time span is what it'll take to start ramping up.
Does that production equal revenue, or is it too soon?
It depends on who we're selling to. If we are selling to the United States government by the contracts I already have in place with the U.S. government, on the day they take delivery, we have to bid on it and we have to be awarded a bid for X specific amount. At that point, then we put it on a truck, we ship it to them. We'll be paid 75% of that, and then once they receive it, they verify what the value of it was, what the actual helium composition, be it 0.999995 or is it 9995. You'll be paid on the rest on that. But as soon as they pick that trailer up, we're paid same day, electronic transfer. Unlike dealing with a lot of other corporations where it could be 30, 60, 90, 180 days in the case of a couple of the majors.
Well, still 30, 60, 90 is not such a long time to wait when you're talking about going into production for a resource company, given that many other base metal, precious metal concerns may never go into production.
Correct. It's not like a mine where it takes 10 years to have a chance to go online and then you're building a pilot plant. We're not into that at all. And as we develop further wells, even within the Macaulay field, and as we add to it, we can start increasing the production from that point. Overall, long term, I would see us having to build 3 processing plants over many years out there to deal with more of the noble gases and that type of aspects of it. That's one thing that was really great about the Macaulay field, is because we had none of the other noble gases. We are not having to suffer with CO2 sequestration rules. It's very little, very minimal. It's everything that we can use. What little bit of methane we had showing up in the Macaulay field, it'll be put in to run the backup plant. Now with the hydrogen, that will actually come off with the final aspect of the helium, and we'll put in a separate pressure swing absorption just to pull the hydrogen at the final point. Then we will process it. So we will be the first operational helium company in the world that is going to run on solar and hydrogen. You can't get any more green than that.
So you don't have to look for carbon credits because you're actually green from the start, and there's plenty of sunshine in Arizona.
We're not interested in carbon credits because we are not generating.
That brings me to the question of the cost of production. Break that down for us, if you will, if you don't mind.
Overall, on the upfront part, when you first are producing crude helium and you're extracting the vast majority of the nitrogen, you're not trying to purify and polish, it's called, polishing the helium out for final product. You're trying to increase it to a 65 to 75% purity. At that point, you are creating a product that's worth between $256 to $285 an MCF. So if you just use $275 an MCF, just as a round number, we have to pay taxes and royalties based on that initially. We have a total of approximately 17.5% in royalties that we pay. The vast majority goes to the state of Arizona, the Arizona State Land Department, or to individual mineral owners. And then there's other royalties out there for a few percent. Then you have the actual cost of that. So that 275 is reduced down on average by approximately 22.386%.
Compared to most resource companies that I cover on this program, your market has performed very, very well, especially over the last year and a half. And I think it's because you're actually going to be going into production and ultimately generating revenue beginning in 2022.
I'd agree with that, and I'm going to let Don Mosier jump in here because he's done an excellent job of promoting us and working with getting the word out.
It was a bit of a Cinderella ride that we were on from when we sampled wells 1 and 2 and watched the stock run all the way up to a high of $4.95. Basically on no news. We did an interview with you, we did a couple other interviews, and we had a newsletter write a recommendation. And then we completed well number 4 and put the numbers out there. In a perfect world, if we got to re-drill the wells, we'd drill number 4 first, and then we go back to well number 2. So we'd have 1.137% helium, and then we would go to 4% helium, and then we go to plus 7% helium. That just isn't the way it worked out. And we wrote up the news release. We got so involved on a technical basis, we really didn't take into consideration the average investor and the way they would look at the grade. Instead, we should have announced that we were pleased to discover the Macaulay helium field, and based on gas composition, it would be the first field going into production, because Rob did the exploration in a logical manner. He went in and he drilled wells 1 and 2 and discovered the Rohlfing field. And then we stepped up to well number 3 up on Meteor Crater. And unfortunately, although we cemented production casing and we're aware that there's helium in the hole from a mass spectrometer at surface, we didn't get to sample it because it went into a temporary restraining order. Then finally, we stepped down into the Macaulay field and drilled well number 4 and found a commercial field with very simple gas composition that's going to allow us to move more rapidly into production than we would if we went and put the higher grade wells with noble gases in the background and those additional steps. So what we've got here is a way to reduce CapEx, move forward more quickly, and along with well number 2, add to that production and go back in and now drill at least 3 more development wells into the Macaulay field and look to put 5 wells into field and get into positive cash flow more rapidly. And I just don't think the market has really appreciated what the company's accomplished along the way, because in addition to that, we've built the team out. We've got $25.5 million in the treasury. We haven't had to dilute further. We believe we can get to the end game. A lot of resource companies get forced and painted into a corner where they're doing really cheap financings, and all of a sudden the shareholders are getting diluted down. We haven't got ourselves into that position. If we do another financing, it would probably be in tandem with a NASDAQ listing, which we're currently exploring. And the reason for doing that, the biggest reason for that, would be to have some stock trading in the US when you go to NASDAQ. Obviously, you want to issue some stock to institutions or high net worth individuals in the US and really accelerate the trading down south, where there's a much broader audience than what we have in Canada. You've got over 10 times as many people in the US that we have in Canada, and the wealthiest country in the world. Obviously, we want to trade down here with a US project.
I just want to make something clear at this point. You are trading in the US right now. I did buy stock in this company on E-Trade under the symbol DMEHF, and any of our listeners can do so if that is their choice, if that is your choice. And when I did come in as a shareholder, it was close to where you're trading right now, which was back in April, I believe. And I did it based on the conversation I had with you. And when you called me, I just want to remind our listeners of how we all got involved. You called me seeking sponsorship of our program, and you weren't pitching me on buying the stock at all. You were not doing that.
No.
So you didn't say buy our stock. You just told me about the company, and you wanted to know if I would cover you.
Right. And don't let me downplay the QX listing that we have on the OTC. Okay. I mean, that is one step below NASDAQ. But trading on the QX, there's certain brokerage firms out there in the US that aren't going to allow their clients to buy on the OTC QX.
Let's just say then the market really doesn't know about us yet.
No, they don't. Not a clue. Very, very limited audience. But once you get to NASDAQ, it's nobody can tell you you're not buying stock on NASDAQ, because at that point in time, you've got the same listing as Apple and Facebook and all the rest of the companies. And some of those companies trading on NASDAQ, our product's absolutely critical to their survival.
Do you see that happening within the next 18 months?
We're pursuing it right now, and we expect to have a NASDAQ listing sometime in the new year.
So we have 4 wells drilled right now. I understand you're going to be drilling about 70 over 68,000 acres. That's a large patch of ground, so you're really not going to be poking holes indiscriminately just anywhere.
And let me correct a couple numbers for you. So we'll probably drill 85 holes, looking to have 70 producing wells, and our current property positions over 85,000 acres, and we're constantly looking at new leases. You will see us acquire new leases. The benefit of myself coming down to Arizona is, number one, Rob and me have been working together for 14 or 15 months, and we've never met until 2 days ago. So when I came on board in August and Rob took over as CEO and chairman, we had $600,000 in the treasury. We drilled 2 wells but hadn't sampled them. The stock was trading at 65 cents Canadian. We now have $25.5 million in the treasury. We've successfully drilled 4 wells. We've got at least 2 helium fields that we've identified, and we think we've got 3. And I got a chance to finally go out with Rob and ask him, you're standing in this massive expanse in the Arizona desert with no real geological formations that are standing out. You're just looking across this broad expanse. I grew up in Saskatchewan. It reminded me of Saskatchewan. And I'm going, why did you pick this spot to drill this hole? So then he can explain to me exactly what he's looking for, all the different geological occurrences that are going on out there and how he's identifying these locations. And one advantage we've got over everybody else in the world, Rob's got more knowledge than anybody else because he spent 20 years studying this. This isn't something that's just occurred over the last 24 months.
What is the potential, and I want to underline that word, potential valuation of this company with 70 wells drilled? Understanding that the answer may be very forward-looking.
You are talking billions of dollars worth of a commodity that is very, very rare.
Don Mosier, Rob Rohlfing, it's been great visiting with you here on the air in Scottsdale, Arizona. I look forward to doing it again real soon. Thanks for joining us today on the program. I've been speaking with Robert Rohlfing, the CEO, and Don Mosier, the president of Desert Mountain Energy Corporation, trading as DME on the TSX Venture Exchange and in the U.S. as DMEHF. Learn more about the company by visiting their website, desertmountainenergy.com. I'm Ellis Martin.
Subscribe to the Ellis Martin newsletter. It's free. Go to ellismartinreport.com and fill out the quick and easy pop-up form.